Hello ladies and gentlemen, and welcome back. In today's video, we not only discuss where we're at and the key levels that we need to be watching in the markets right now, but also options expiration. That's right, we're ahead of quadruple witching, an event that only happens once every quarter in the US stock markets. Trillions of dollars are at stake, and what happens next may surprise quite a few of you. We'll be deep diving into the options, into the chain, and understanding what it really means for the bigger players out there in these markets. Because after this week, we may see a big move. And that move may be to the downside as well, putting pressure on something that we've been talking about for a while, the 3750 area. So sit back and relax as we go through everything that you need to know about the markets right now. This one will sure be good. Well, welcome back everyone to the Daily Show where we talk about stocks, commodities, and cryptos daily. We'll start here with the macro data, then we'll get into the charts, and of course we'll cover the options chain and why you need to be watching that right now. Another horrible day for big stocks. This is what we saw on the Tuesday event. Most importantly, the only amounts of stocks that were up was less than 5%. You're about to see it was even less than that when we really bring through the data a little bit later in today's video. Yeah, this was pretty rare. And of course, it's happened a few times here in 2022. We are starting to see the volatility that comes usually with a recessionary style market. Oftentimes when you get these types of really low up issue days, you will find some form of support. And in the previous session, we saw a small bounce in the market. Is there more to come? Stay tuned. We'll talk about that later. The last 200 days have suffered so many of these severe selling days. You can see we're over 10 now. This is pretty rare. If we go back over 100 years of data, realistically, it doesn't happen that often. In fact, to get over 10, really we're starting to talk about the GFC and even the 1930s in terms of how many times this has happened in the past. Very rare. We're witnessing, again, history, which 2022 seems to be doing. What made Tuesday so special, though, in some terrible ways, was that it was actually less than 1% of stocks advanced on that session. This is a very rare reading. You can see here the dot plot over the last 100 years, how rare it really is. And what it tends to do is it tends to present that possibility of further weakness over the next 2 weeks. Yes, it doesn't necessarily mean that we're super weak, but it does bring up that possibility. Less than 1% of stocks were up. And this is going to be important when we look at the options a little bit later on. Another thing that we know is the big traders, that is the biggest fund managers in the world, are heavily underweight in equities. If the market does start to recover, they have not been buying in correctly for their weightings. They're very heavily in cash. Obviously, we see the US dollar doing very well and a whole bunch of other things going on. They're so low in equities in terms of underweight. That's a record low, surpassing 2008. And usually I'd use this as a bit of a counter logic, but here's the problem. The market is nowhere near the correlation to how underweight they really are. Is there something more afoot? Well, it would also show itself in, of course, large traders protecting their portfolios. And this is something that happened here. And look at the 2008 reading. Then we saw that really big capitulation fear dive. Will that happen back of September, early October? Midterm elections, of course, inflation out of control, lockdowns in China. There's a lot to hate about this market right now and a lot to be very careful about. This has sent, of course, record put purchasing from the big players. And we've reported that quite a few times. Is this all in line with seasonality? Well, yes, it is. Midterm election years obviously weak around September into October. And of course, the SP500 in general, weak through September into October. In fact, the data really presents that weakness coming through in the back end of September. And we'll look at the options chain to see if we can prove this concept a little bit later on, because this is the important one. Will we flip next week even further, make new lows, and start to really drive down to potentially 3750 or even lower? Well, this is what may happen if we do get a new low in the stock market overall. Always keep something like this in the back of your mind. What's the average? What's the median? Since the 1800s, what kind of data do we have about recoveries and bear markets and the length of them. Maybe pause the video on this, take a screenshot, whatever. It's a very good little chart to have handy in the future. We've talked to death about these correlation periods. Obviously, a lot of people pointing towards 2008 and 1973 at the moment. And there's also, you have to keep the open mind that we've kind of gotten back down to similar levels like this, which is the 1962 bull case scenario. So they're the most correlated markets right now. Let's jump into the charts and begin by talking about the VIX. Nothing new on the VIX right now. There may be worthwhile setting alerts for a VIX high of 28, but I think if we're going to get a 28, you're most likely going to see a new low forming on the SP500, Nasdaq, Russell, all of those kind of markets. So the VIX just in the middle of nowhere land, neither at an extreme high or an extreme low at this stage. Not really helping us too much. Let's move over to yields. They continue to climb higher. Take a look at this. The US 2-year yield sitting at 3.788%. If we go to the bonds market, they're looking at a 4.4% reading. So effectively, this is a huge reading here. It's saying that by April of 2023, the federal funds rate is now going to be 4.4%. I've talked a lot about the idea that if we get past 5 to 5.5%, we'll reach a tipping point. This will be where basically the straw breaks the camel's back, or however that saying goes. And I really feel like this level here, 5%, not only will the US government have a hard time realistically paying its debts, but it's going to kind of send like a cataclysmic effect through the debt markets. So it's really getting quite dangerous here in terms of where yields are. We don't know it will reach this level, but of course that's what the bonds market is saying. And then after that level is hit, they're saying small cuts to try to support the economy as inflation hopefully tempers itself. We don't know any of these situations are going to play out just yet, but we have to keep an open mind that inflation could still be dealt with. I know it's going to seem hard right now, and most people, I've seen people on Twitter posting to me, 250 basis points, that'll get it done, or push it to 8% right now. Hold on there, guys. If we push the interest rate to 8%, that's going to be very, very bad. And of course, a lot of you say, well, let's get it over and done with. I think the pain and the backlash on that would be just so extreme. Yeah, we don't want that to happen right now. At least I wouldn't anyway. Yeah, I don't wish that on anybody. Believe me, it's going to be bad. DXY here, if we go over, this was where we saw that little bit of weakness. So if the US dollar does keep coming down, it can really support that idea of the market having a small bounce in it. Does that seem like what it's going to do? Well, here's the issue. The DXY moved up rapidly. It's now pulled back a little bit. It's still in an uptrend. Nothing has changed on the big time frame. So I'll just give you some levels here if you're listening in the car or just want to know some levels. Until the dollar index really gets underneath 107.60, it's going to be hard to say, okay, at least on the medium time frames, this thing is starting to weaken. And after that point, what I would expect is a pullback and then weakness to come through. The market still could easily go quite a lot longer on the US dollar. So it's not a clear trade right now. And this often happens after that big bit of economic data really appears. There's a lot of counter kind of logic here. For some resistance levels or levels that would be pretty big potential shorts, around that 110.25, if that level gets taken, you'll notice it's spiked by 3 wicks. I think a little up and then kind of rejection of this zone could be a potential short. Then if we take this level right now from that, then we're talking about the potential for some downside. For the bull side or the bulls in general, you're looking for it to come back down to that 109, probably around 109.80 area, and then potentially some nice buying structure on the smaller time frames. It's a tough one on the US dollar. Gold, of course, is becoming much more clear. Now, we've talked about gold and strength and all this stuff, talking about 1700, 1710, these levels for the potential medium term. The thing with gold is it just made a new low, and this is good. I know you'll be thinking, why is that good? That's ridiculous. It took out my stops, blah, blah, blah. Yeah, it's kind of designed to. What most traders would be looking for now, and it doesn't mean it's going to happen, of course, it could completely go short. It does look like that way at the moment, is that you have to have the patience here. If gold now makes a new high and it gets past this red box, pricing wise, let's say we clear a 1708. At that point, if the market pulls back a little bit, let's go back into a 1705 or even a 1700, that's where it would be a higher percentage statistical chance of going long. It's all about this being kind of like a max pain style level. I've met and I've talked to a few people recently that have said they've got stopped out around here. Fair enough. I understand why you may have a stop loss underneath that. You may have a stop loss underneath here as well. But this move would be quite significant. And that's the type of patience and then reacting to this move here that you want to have. Remember, predicting is cool and all. And of course, we are predicting here on the channel, but it's all about finding your edge and then having that statistical advantage. So I'm looking at this level right now for gold bears. Well, of course, you're probably salivating a new low. And if new lows do form, I mean, the market could realistically tank down pretty heavily. We'll talk about that should it happen. But if we get well under, let's say 1663, and we don't instantly reject these lows here, then there could be some serious problems for gold. I don't suspect that will happen, but time will tell. We'll find out with the US dollar. US oil starting to look like an inverse head and shoulders. Few people sending this to me. Absolutely, I agree with you. It does look like an inverse head and shoulders. We've got our clear resistance level. I'd like to see that taken. Maybe a small pullback and then go towards the long. Generally with inverse head and shoulders or patterns, what you're looking for is you're looking for usually some kind of proofing by the market. That is that the pattern would make sense to the take profit. In this case, the take profit would be above this high, but I think that would be the most logical conclusion for a profit target zone around that kind of 96, 97 area. Nice inverse head and shoulders should it eventuate and actually confirm to begin the process. And it's certainly around the key area here of the previous closure highs on the weekly. You'll notice I have had that zone now on the videos for a while. I'm not really too much of a fan of trading the oil trade at the moment due to the geopolitical tension, but every trade is just really a level of risk. And of course, you can set that level of risk and protect your account accordingly. Let's move over to Tesla. So Tesla took the high of the previous point over here on the 12th. It had a very strong showing actually for the session. It went up very aggressively, hit this little period, and then of course sold off there. And that's going to be the most probably talked about zone now, I would say, over the next day. If you look at Tesla, you can see here that the high was taken and then it moved down. It created a little double bottom by the end of the day. We've got here the low, the resistance, and of course the breakout. This is posing towards that potential of, further bullish action. We don't know the market's going to do that. We'll talk about the SP500 just a moment, but this is Thursday, the day before options expiration. This usually brings with it some volatility, some extreme market action. If you're looking at it just on the surface, these double bottom style patterns have started to work pretty well. If you got the short in around here yesterday, congrats. That was a very replicatable trade, so well done to you. But yeah, a little double bottom there, and we'll find out whether it can hold. Apple was similar. It bounced off the low. You can see the 2-day now, and we'll zoom it in so everyone can see it here. The 2-day would actually be like a long leg doji. This is the 4-hour, so the 8-hour here. The daily is a long leg doji. We have the high, the low, the open, and the close sitting right around that zone. Equilibrium, effectively. The market's not sure on its next move. That's what the long leg doji really shows you. If you go here to the daily, you'll see what I mean. High, low, open, close. Similar to over here, we got the decision made, we moved up. Here, we don't have any real decision at this stage. So that's going to be an important one to watch. Let's have a look at the smaller timeframes. Let's go down to the 15-minute. We don't have really any double bottom kind of patterns or anything like that here going on with Apple. We do have a small movement like this, pull back to potential rally. Could be an order here for Apple, and it's important to watch this zone. A new closure below this level though, and that's going to expose some way lower points. Of course, at that point, we're talking even potential to get back down into this 144. And that's going to be consistent with that 3750 that we'll talk about in the markets in just a few moments. What are bonds telling us? Well, high yields unhappy, high yield kind of more risky bonds. Corporate bonds here, they are moving down. Overall, my bond market indicators are saying stabilization. So while yields are actually increasing, the bond market in general has actually held okay over the last couple of days comparatively to the bond markets. Here's a big one leading into the quad witching in the next 2 weeks. QQQ versus the SPY. This is the Nasdaq versus the SP500. The ratio here has been a trend line that has held for basically 2 decades. Ever since the lows here of 2002, We've got an incredible run here on the trend line. Will this trend line break down? Well, at this stage, it's being put under significant pressure, and I think it's one to watch, and we'll keep bringing this up on the channel because this ratio is fairly important. DAX, absolutely nothing going on here. High, low, long leg doji, indecision ahead of the events. I think DAX will be driven mostly by the US market in this case. Speaking of the US market, let's take a look at the Nasdaq. What did the Nasdaq do? Well, it started kind of structuring up. It then made a new low during the session, rallied to make a new high, and came back down. If you were someone that bought in here for the end of the close, I think that's a pretty solid trade. Well done. Now it becomes a little bit more tough though, because of course we do have this area over here, which is a bit of an issue. And this is where you expect those sellers to come back in. They've already started to try to sell it off a little bit, but in here is the issue. So let's go to a 5-minute chart and just take a quick look at this. All of this structure is realistically pretty pointless. If we take out that, okay, then we pull back. Yeah, there's potential here for longs. And the reason is because we're getting past that structure. We're showing that the market does have a bullish intention. At this stage, you have to be open to this potentially even being a bit of a false break up, the market coming back down and making a new low, then rallying and then potentially giving you the short. There is a real chance here that this could be a continuation short. But when we look at the options chain, I'm still leaning towards that smaller buy opportunity over the next 2 days in terms of getting it back up, and it will make sense when we take a look at the options. It doesn't mean it's going to absolutely happen, but of course, we're just trying to use the information at hand. S&P 500, long leg doji, again, key critical zone here. Previous resistances, previous supports, one of our favorite previous zones to find the buys. We certainly got those. The sells came through perfectly. We just don't have enough information quite yet. If you take a look here at the SPX, you'll notice it did make the new low. So we had the low, the new low, and then we've basically rallied up. This is going to be pretty important. Let's take a look at the futures market and see how that's looking. So again, the low was taken, we've rallied up, and we've formed kind of this triple top kind of resistance area. I'm looking for that to get taken. Let's see a new high, small pullback, and then ideally move into this area. If you're looking for longs, this is going to be a big issue. This is around that 439, 4,000 zone. So probably just underneath 4,000 is going to be a bit of resistance. Very similar to the Nasdaq. It's on support. If we get the new low taken, you don't have to necessarily have FOMO into the new low shorts. If you're going to take trades to the short side, do you do it with options? Do you do it with CFDs? Do you do it with leverage futures? You know, these are all things that you've got to come up with the instrument that's right for the trade. Here we're forming structure. At the moment, we'd think the structure towards the buy side just because of the epic sell. But if that structure gets broken, most likely it will come back and allow you in. And if it doesn't, what's the worst thing that happens? You miss out on the opportunity and you look to the next support to find that next opportunity. There's always a new one out there. Have the patience, guys. React, don't predict if possible. Now, I've left this purposely not refreshed. And I wanted to show everybody here the options. Let's see how it's all changed over the last 24 hours. So total open interest amount, it's a big one. This options expiration is massive. Let's refresh it now and see what's happening here with the max pain. 405 on that current reading. We'll check it out now. And it's now sitting at 400 for this, and we're going 405 still for this one. So we've got a little bit more open interest in terms of the options. You'll see here we've still got a 370, huge amounts of puts. It might have been a little bit of a close here, it looks like, on the 400s. But this is where the important level is. So we've got the 405 still being a big one. We've got 390 showing one of the higher levels of puts. And we have all of these put walls, and of course a call wall over here in the markets. If I was trying to make the most amount of money being Wall Street, let's say a lot of these options are owned by large traders, Wall Street's riding to those, and of course there's a lot of retail traders in here, you would want the market to close within this boundary, between the 390 and kind of the 410. Ideally, you would close pretty much directly on 400. That would be pretty good. Now you'll see at the time of this recording, we're at 395 on the close. So we're very close to that. And if you look at the previous session, if I can still pick it up, 400, look at this. Stock price, max pain, still a decent amount of open interest. Well, they got very close to it and did quite nicely. Those calls were coming in near the end too. Quite a few calls being bought up. So I think the market will probably try to stay within this range coming into the Friday. That would make the most amount of sense. And the reason why is when you start to drop out to the next week. So let's have a look at the 19th. Notice the open interest amount, only 291. It's not really consequential if they pay these types of options off. It's nowhere near the amount of money lost. If you go over here, open interest amount 21st, very weak. If you go to the 23rd, 638, still very low. 360 is where the puts are and 375. So if I was putting on, let's say, let's go with manipulation circus, and we were thinking, okay, how do we make the most amount of money if we're writing the options to everybody on the street? It's actually the week after this week that has the weakest amount or the least amount of puts stopping the market from going down. And these are what kind of opens up that really interesting point and opportunity. What do you guys think about that though? Do you agree? Do you disagree? What do you think is going to happen here into the quadruple witching event? Let me know in the comments down below. Let's move over to Bitcoin. What's going on with Bitcoin? Long leg doji, indecision, market structure was on the left-hand side here. And of course, volume is elevated over the last couple of sessions. And the same thing was actually happening with the stock market. If you look at the volume, it was decently high when we actually had that previous day of movement. Even though it looked like nothing was happening, there was actually a little bit of volume going through in the last 24 hours. Here's the low that was formed. Of course, we have the high here, 20,500. This could be a pretty significant little potential trade, very similar in line with the markets at this stage. Take the high, pull back a little bit. Maybe there's that little bit of strength into the next kind of orders over in this zone. This was an aggressive move and it may be countered back up. Again, it's a risky trade. This is not what I would call super high statistical levels. Sometimes we see them. Before the inflation number was certainly one. Over here was much better. But yeah, this is still an interesting area and should be paid attention to. If you haven't already, come and follow us at FX Evolution on Twitter. Join our Discord community. Join the private Discord community if you're interested in finding out our daily newsletters and our daily videos that we put out pre-market. They're always good to have a read and check them out. And of course, we know that there's more economic news coming, and this may be the catalyst either way. Core retail sales and retail sales, 8:30 New York time. This is probably going to be what makes or breaks these strategies. And that's why having that patience potentially could be worthwhile. Core retail sales, 8:30 a.m. Then we've got retail sales. And then, of course, we also have 10 a.m. New York time prelim UOM consumer sentiment on the Friday, along with the quadruple witching event. There's a lot going on in the markets right now. Make sure to subscribe if you enjoy the content. We'll see you in the next one. And of course, wish you the best in your next trade or investment journey. Bye for now.